All right, Matt Davio back with Emily Lambert. Emily is an author. She writes for Forbes magazine, and she's also got a new book out that just came out January 3rd of this year, so it's only been out less than 3 weeks. And it's getting a lot of buzz. The book is called The Futures, is the title, which obviously is something that we're very interested here as trading futures here at Miss Trade. And the subtitle is The Rise of the Speculator and the Origins of the World's Biggest Markets. I bet you that's something, Emily, that most people don't know, that the futures markets, the commodities markets, are bigger than probably the stock markets as far as dollars, nominal dollars traded.
Yeah. I think people definitely don't know that. Actually, there's some people have put reviews of my book up on Amazon, and I look at them, and I'll say one of the reviewers is my uncle, so I read it and I think, oh no, why are you doing this? But there's someone who just bashed the book, and one of the things that he says is he's like, this person has no idea what she's talking about. These markets are not bigger than the stock markets. Is she crazy? And no, so clearly people don't understand.
So here's your chance to refute that. Why, give us some facts. The futures markets, how big are they? What is the size of the futures markets versus, say, the Nasdaq and the Dow and the Amex? Give us some scope and some scale here.
Yeah, now I'm on the spot. And I haven't looked lately as to how big the futures markets are. The derivatives markets, the total derivatives markets, and part of what this book is to show where the entire derivatives markets came from and the origins of those. And the derivatives markets, last I looked, were over $500 trillion notional value. They were up to, $600 trillion in 2008, so they've come down a little bit. Yeah. And the stock market is clearly nowhere near that. I mean, you could argue notional value versus actual dollars being exchanged, but I mean, it's, as far as I'm concerned, the only thing that matters is that these are giant markets and they impact everybody, and I was interested in where they came from.
You know what? As a trader who started in the equities and options marketplaces for let's say a decade before I really switched over to futures full time about 7-8 years ago. It's exactly true. Most people, again, they've been told by their brokers, their financial advisors, stay away from, again, it's a gambler's place in this futures, derivatives, options world, when in reality it is probably the most liquid and probably the best, safest place if you really want to trade. And I always tell people that, and they still look at you like you're crazy, but it's absolutely the truth. So let's get a little background on you, Emily. You write for Forbes, and you've been writing for them for about 5 to 7 years right now.
More than that. Time goes by fast. I started at Forbes in July of 2002, and then I moved to Forbes' Chicago bureau, which is small, in spring of 2004. So I've been here for almost 7 years here in Chicago. So
a little bit of background. You and I have a little bit in common. We're both Michigan grads.
Yep.
You spent most of your time yes, go blue. You spent most of your time up on the North Campus, though, as a music major.
It's true. Well, I did a dual degree. I made up an independent concentration in the arts and sciences school, and then I was a flute performance major. Okay. So I spent a lot of time on North Campus in Michigan. Which is
a beautiful spot. Have you seen that new dorm that they're building up there? Have you seen the pictures of it?
No.
I saw it in the LS&A magazine. They spotlighted it last quarter, whatever. I think it comes out every quarter. And it's it's very high tech. Definitely is a very cool dorm. So anyways, check it out when you see it. So let's talk about this. How does a music major, with a concentration in the arts end up writing for Forbes, a business magazine?
That's a question I've asked myself many times. I was a music major, but I really like to write. So I started writing reviews for the Michigan Daily when I was in college. And God, please don't look them up because some of them are just horrendously bad. But that's how I started working for, a newspaper, a student newspaper. And then after school, I decided that I was really not the kind of person who had a performance. It wasn't in me to perform, and I really did love writing. So I went to work for the New York Post in New York as a copy kid, ferrying around pieces of paper and also going out to crime scenes and wherever else they sent me. And then they moved me to the business section, which I had no idea at the time that the Post had a business section, and I landed there. And then there was a job opening at Forbes, and I moved over to Forbes. But when I got to Forbes, I will tell you, I knew next to nothing about business, and it kind of shocked me that I was there. And when I moved to Chicago, I knew next to nothing about futures and derivatives. And in a way, I think that's been useful just because I've literally had to ask people to explain it to me from the ground up.
Sure. I would agree with that. You came in with no biases either, so you really had a clean slate, so to speak, when you're looking at these the markets, especially when it comes to futures, and we'll get into that a little bit. I want to ask you a couple questions. When you were at the Post covering the crime scene, and I don't mean the actual scene, but the crime scene. What was it about that? Covering the New York crime families, especially with the news in the last week, with 100 people getting taken down. That had to be pretty interesting.
Well, true. Well, I literally, though, was going to crime scenes. I wasn't covering necessarily the mob. The Post has a great reporter who just covers the mob, but which must be a very interesting beat. But and weirdly, I had moved into some of that in the with the futures book. But no, I literally went out to crime scenes in all areas of New York City, in Brownsville and Brooklyn, and to hospitals in Staten Island, and wherever a cop had just been shot, and all these things. And that's a big part of what I did for the Post, and that was, I think, the best way to get to see New York in a way. I mean, yeah. I wasn't from New York. I moved to New York, and then I really saw New York at some of the weirdest angles.
And you're also originally from the Northwest. So again, we cross paths here in our lives, but you grew up in the Portland area.
I did. Yep, I grew up in Portland.
So how does a Portland girl end up in Ann Arbor, first of all, for college, and then what's that like, moving from Portland to Ann Arbor, and then over to New York, and then back to the greatest city in the States, in my opinion, Chicago? Chicago,
which I love. Portland to Ann Arbor was because I was a flute major, and the flute teacher in Ann Arbor was, one of the best, and so I went where the flute teacher was. Ann Arbor to New York was a big move because I thought Ann Arbor, while I was there, was the busiest, coolest place on earth, of course. And then I went to New York and I realized that Ann Arbor was not the busiest, coolest place on earth, and that the world was bigger than that. And then New York to Chicago, I'm just constantly amazed by the fact that people even compare the two cities. To me, they may have been alike in the 1800s and, right. Grown up similarly, but they're so different, and they're just so wonderful in different ways that it always surprises me people equate them.
They are so different, and what are the most glaring differences to you, as somebody who's lived in both of them for extended periods? What are the pluses and minuses that you like in each spot?
Well, in New York, it has a wonderful energy. That's when you walk down the street and you see people with blue hair, and you bump into people who are just doing really unusual, interesting things with their lives. I think spills over into the culture of the place, and obviously there's just every nationality of person living in a very small area, and there's a lot of energy, and there's a lot that's I found really exhilarating. And in Chicago, it's also incredibly exhilarating for a really different reason. I think Chicago has this wonderful city pride and a really interesting history, and also it's just a very different culture. And a lot of that culture I understood, but I understood more when I started writing about it, because I started understanding where it was coming from. I'll tell you, when I came as a reporter from New York, I was used to dealing with people who were really eager to tell me about their, whatever business they were in, a lot of self-promoters. I moved to Chicago. I had to readjust and try to get people to talk to me and convince people to talk to me, because there really is a huge cultural difference in terms of self-promotion and privacy and sharing. And so that I noticed right off the bat. It was a lot harder to get companies and people to talk.
Yeah, but I bet you had experienced that somewhat, being already, again, that you spent some time in Ann Arbor, Midwest town. Chicago is more like Ann Arbor, I would say, in its, like you said, in its privacy features than New York, where everybody is, hey, look at me, I've got a big ego and I've got a great story and ready to tell you about it all the time. And, I mean, when you think of the personalities of Chicago, you've got, Donald Trump in New York, and in Chicago you have Oprah, I guess you could say, and she loves talking about herself, but most
true, but Oprah loves talking about herself. She's a good example of Chicago. She loves talking about herself, but she will not talk to the press. She does not. I mean, she is not.
She's very guarded in her person. She loves talking about her business, but she doesn't like talking about herself, really.
True.
Yeah. So when you went to Forbes, then and again you left New York, what were you covering? Again, explain to people there are markets. Obviously, most people are familiar with the big board and the bell ringing in New York, but there are equally, again, we discussed this in the beginning, the futures markets, the options exchanges, the commodities markets, which now are kind of combined in Chicago, which they weren't when you came there, and we'll talk about that a little bit. Very different world. And I think because of that, just the way it's less known by the masses, yet the volume and the dollars traded in Chicago is probably bigger than New York today.
When I came to Chicago, it was basically with a clean slate, and Forbes was a little bit oriented differently at the time and said basically, you're going to be a Midwest correspondent, cover the Midwest, whatever's there. And when I was given a choice, originally I was told that they wanted to move me to either Chicago or to Houston, and which one did I prefer? And I thought about it, I wasn't really sure. Houston sounded like it would be like going to a different country in a way, totally different. I had considered Houston, and I was kind of disappointed when I got stuck in Chicago.
Really?
And my editor said to me, one of my editors said, I was talking to him, he was like, don't be ridiculous. There's a lot to cover in Chicago.
Yeah.
And I got there, and of course, I mean, there is a lot to cover, but it's so, I don't know why it's so overlooked by the national media so often. And the futures markets and the options markets, I think, are a really good example of that. There's a tremendous amount going on, and not only just going on now, but what a big part of what my book was about was how what's gone on in Chicago has shaped our entire financial system. I mean, in a big, big way. And a lot of it started in Chicago and took place in Chicago. And people don't even notice it because it's not in New York. I think it's not in New York, and it's not in London. And there are 3 of us in the Chicago Bureau in Forbes. I don't think Fortune has a Chicago bureau. It's just the national media does not have a very big presence in Chicago, and it just it amazes me.
Well, and I think that may change. I think we're in a spot. I think where futures are going to become futures and commodities and forex are already transitioning. I think the stock markets have really become so less volatile, if you can believe that or not, than traders like. And traders will always gravitate to where the action is. Speculators, traders, and Chicago, I think, has more action than anywhere else, in the planet right now.
It may be, but even if you think about the stock markets, who are all the biggest players? Getco is in Chicago.
Right.
Infineon is in Chicago. A lot of these, Citadel is in Chicago. The people who grew up in the markets taking risks and trading, being, the professional traders, for a lot of them are in Chicago.
Right. So give us a little background on, and as you said, you knew nothing when you moved there. So what kind of history did you find, the CBOT and the CBO and the CME, which are all the same now, but give us a little background on what you started seeing, and, give us a little history and what you kind of jumped into and talked about in the book.
Well, so I just had a wonderful time just meeting people around Chicago when I first moved here. And I found myself running into traders at the weirdest times and in the weirdest places. Like my husband and I took up tennis, which we do not play well, so don't get the wrong idea. We're really bad, but we started playing tennis at the local park, and then Ray Conman, who was a massive interest rate trader, massive now. I honestly don't know, but But if you talk about interest rate trading, a lot of people just say Ray Kahneman. So we met him. Was reading a Trading for Dummies book on the lakefront one day because it seemed to be that trading was a big business, and it seemed like I should find out something more about it. And some young guy came up and tapped me on the shoulder and said, "Don't worry, it'll get easier." And because I was reading about butterflies, and I just thought, how random is this in Chicago that there just literally seem to be traders everywhere. I took a yoga class and it was a trader. I mean, it was like the culture is everywhere. So that's how I kind of got interested in what is this big local business. And then I wrote a story shortly after moving here about a broker who at the Board of Trade who was refusing to go electronic. And then a couple of years later, I wrote a story when the Board of Trade and the Merck merged. Obviously, there's a lot that happened in the middle, and there's a lot that happened afterwards. But those two stories, for me, really were my introduction to the trading culture. And what happened is that after that cover story ran on the merger, I got a call from somebody at a publishing house who said, "These guys sound kind of interesting. Do you think that there's more to say?" And I said, "Yes, I think so." But I didn't have a really good idea of what it was. And so I actually agreed to write a book, and then was like, what exactly am I going to write a book about? And decided to start talking to a lot of the older traders and started working my way back in time. Started by talking to the high frequency guys and the electronic guys, and then going and talking to the floor guys, and then literally was like, well, okay, so what became before stocks? Okay, what became before bond futures? Tell me about the egg. You know, it didn't start falling into place, the history of what I was going to write and the history of this industry, until I met an egg trader. And then I started to understand.
So talk about that. What is an egg trader? Most people again probably don't even realize that eggs trade on an exchange.
Yeah, so the Merck, the Chicago Mercantile Exchange, there were two, as you know. The Merck was the butter and egg board, and it was literally a bunch of butter dealers and egg dealers trading futures. And and I feel very lucky that I got a chance to write this right now, because there are a couple egg traders left, and they might not be with us forever, you know. So, but hearing from them what the exchange used to be like and how it grew was really just phenomenal to me. I mean, it was literally a couple hundred guys trading eggs, and it grew into the markets we know today. And that happened in the span of 50 years, which that's a lot to happen in 50 years. So explain to people what a futures contract is in your perspective. You know, exactly, if I've never traded futures, what does it do, and how is it a market, and how is it different than, say, a stock market, which most people are familiar with? So the stock market is easy, because if you want to own a piece of Apple computer, then you buy a share and you own a small piece of it. A futures market is different, because when you're trading, you're not necessarily owning anything. It's an agreement to buy something. You're locking in a price. Right. So if we're trading corn, you and I are agreeing on the price and locking it in now. And so if I'm in the business where I need to use corn to make cornflakes or whatever I want to do with it, then I am hedging by locking in a price and using it like insurance. And you might be speculating because you're not in a business that involves corn. So that's a big difference. And I think also the stock market is for people who invest. The futures market is really, as far as I am concerned, it's for traders. It's for hedgers and speculators. It's not necessarily for investors. Yeah,
I would agree with that. I mean, although people like Jim Rogers would argue that there is definitely better times to buy commodities and futures than there are stocks and options. So I think, but as a trader, a true trader looks at them as an opportunity to make money, whether you're long or short. The beautiful thing about futures is, again, most people don't recognize stocks. If I want to sell short, I have to go to the market. I have to call my broker. I have to get a borrow on a stock. In the futures, there's a bid and an ask all the time. So there's always a price, and I can sell that price. I can sell the bid. I can buy the ask. And that's beautiful.
You can speculate much more easily in the futures market, and you can invest much more easily in the stock market. And it's true, you can. I think it's the difference is buy and hold. In the stock market, you can buy and hold. In the futures market, if you buy and hold, you can run into a whole lot of trouble because the markets just physically operate differently. So you cannot buy and hold in the futures market.
You can, but they're very levered. It's a levered product. A lot of things can go, for you, but a lot of things can go really bad really quickly.
You'll end up having to either take delivery or roll, or you'll have to buy in a future month that doesn't have a lot of liquidity. It's just not oriented to the same kind of trader.
Right. But that's what makes it so fun, I think, and that's what makes it, really, if you get down to it, the futures to me are the prime, just the prime of what markets are about. This, like you said, it's, eggs, whether it's eggs, cotton, lumber. There's guys sitting in a pit saying, I'm willing to pay this for it, and I'm willing to sell this for it. And to me, it's the purest form of speculation. Trading it's the best game on earth, and the futures pits are just great for me for that.
I had so much fun getting to know traders, and one thing that I have an enormous amount of respect for is people who literally stand in the pits or who do it on the computer, who are using their own money and taking these risks and thinking about them and living with the consequences of them. Right. When I hung out on the floor in the Dow pit for a while last spring, and I was talking with a trader who said, he always goes home and he tells his wife either good day or bad day, but he doesn't tell her which kind. And, it's an enormous amount of pressure that you guys are trading with, and I can respect that. I personally could not live with that pressure, and I don't think I could trade. But it's true when you say it's the kind of the purest form. I admire the people who take the risks, and I think it's very there's a big contrast between that and between people on Wall Street who take risks with money that's not necessarily theirs, with institutional money, and don't have to feel the effects of it the same way. I mean, but I do think it's a pure form, and I think there's a lot to kind of learn from it.
So you've hung out with, as you said, electronic, high-frequency trading, quants, I call them. You floor traders. What do you think about the advent of electronic versus the floor? Is that a good or bad thing for Chicago?
I think it changes the game entirely. I think Chicago seems to be still well positioned, I think, to do well in the electronic world as well. But it's a whole different game. It's a whole different game for the markets. It's evolving differently. It's now the futures markets and the securities markets are closer together than they've ever been. So for Chicago, I think it's fine. For the marketplace and what it means, I think is the really interesting question. How are these markets going to continue evolving? Are they going to stay solid and fair and serve the purpose that they're intended to serve? And I think that's the big question.
Yeah, I think it's a difficult question to answer. I don't necessarily, you hear a lot of people, from the floor argue that without a floor they're not fair. But I think you could argue that without pure electronic, bid ask, it's not fair because there's always another layer of, underneath the pervasive bid ask, I guess, when you have a floor. The guys there's just a lot of opportunity for front running when you have the floor situation versus. Oh,
the guys on the floor know how to work that system, and the guys on the screen know how to work that system too. So
absolutely.
So it's a matter of, at the end of the day, someone's going to make money as a market maker, right?
Yeah.
I think that's going to happen. It's more about the stability of the markets and whether they serve the function that they're supposed to serve. That's to me important.
I agree. And you've got to have liquidity. Liquidity is king to me, regardless of which way it goes. And I think there's a combination will always exist. When you look at things that are going on in politics in Chicago right now, and, nationally, Chicago's a very good picture. You've got a lot of troubles, tax increase. You guys just had 66%. Do you think? Have you heard any talk out there about the exchanges possibly moving, off-site, offshore? I mean, it'd be very easily electronically to move to, say, Texas or Florida, where there's a better tax advantage. for the exchanges to operate. Do you see that ever happening?
Who knows? Sure, could it happen? Yes. Do people talk about it? Yes. One of the things that I learned is that they were threatening back in the, is it the 70s or the 80s? I think it was the 70s. They were threatening to leave and move to Dallas.
Right.
Because of something similar. So they've made these threats before, and I believe they just got a nice tax deal to keep them happy. Fact is, there's a huge amount of infrastructure here in Chicago. So even though they are electronic and they could move wherever they want, I think they'll also have to consider the fact that there are data centers here.
Right.
The CME is building a massive data center right now. Traders have put enormous amounts of money into these centers, so it would be physically very difficult for them.
So let's talk about one of the first scandals you touch on in the book, the onion scandal. First we were talking about eggs, and now we're going to talk about, onions. So give us a little background. What was the onion scandal that you talk about in your book?
So the onion scandal was when the Merck was a butter and egg board. They traded eggs, they traded butter, and they also traded onions. And this was literally because there were people who were selling eggs and onions and potatoes in, about a mile away from the exchange.
Right.
And in the onion scandal, essentially what happened is one of the very colorful traders, and he was a very colorful trader, he cornered the market, and he would drive up the price, and then he would drive down the price, and he would drive up the price, and he would drive down the price. And, you can imagine, and the onion farmers were really annoyed by this. And they went to their congressman, and a lot of the onion farmers were in Michigan. Their congressman was Gerald Ford, whose library is on the north campus of U of M.
Sure.
And they, Gerald Ford and his supporters in Congress got onions banned.
Right.
So, onion futures. Of course, we all eat onions today. But they banned onion futures. And that became, until recently, with box office receipts, the only futures market that's ever been banned. And in fact, you could say that the definition of a commodity legally is so broad that it was basically anything was a commodity except for onions, according to the U.S. government.
And that stayed the course. So they're still not trading onions.
They're still not trading onions. And to me, this is a really important contract in the history of the markets, because you can't really, a lot of people say, well, onion prices would be less volatile if we had onion futures. This is an example of government overstepping its bounds. I think, you know what, we live without onion futures. We survive. It goes on. To me, this shows that futures markets really are a very important tool.
Yeah.
And they can be used in a way that's really helpful, or that they can be abused and used in a way that's not so helpful. And this was an example of them being abused in a way that was not so helpful. But ironically, onions kicked off this whole period of financial innovation and led to the markets that we have.
Well, would you say, and this is also a difference most don't understand, maybe the Merck was probably more aggressive in creating futures products than the CBOT. There was a distinct difference, always there. The CBOT basically said, there's got to be, it's not just something that we can speculate on, but it's got to be something economically important for us to, deem it tradable on the CBOT. Whereas the CME was like, like you said, onions, box office receipts, what's the weather going to be tomorrow? We'll trade it. It's basically, if we can bet on it, we're going to trade it. It's kind of the, the Irish, English, punters society. The CME was more like. So what do you think, now that the CME and the CBOT are one, which, which has overtaken the other? Is one stronger than, are we more likely to go with just gambling, speculating type products now?
Well, by asking that, you're going to get me killed when I walk down the street of Chicago. I don't know why you would ask me that question. No, I think that you look at the management of the exchange today and you see that the Merck took over the Board of Trade.
Right.
And, so yes, I think that the culture, if there's one that's dominant, it's the culture of the Merck. And I think you're right, that they were the more spirited, perhaps, innovative of the group. And I think that also has to do with when you look at who ran the exchanges. The CBOT was in the people who ran them and had a lot of, clout there were the grain companies, the big institutional players.
Right.
The Merc was really the brokers and the traders who were looking for something to do to make money.
Right.
So when they lost onions, they came up with new contracts.
Yeah.
And it took a lot of kind of turmoil for them to move out of cattle and bellies and go into currencies. And Leo Melamed is credited with doing that. But there definitely is a cultural difference between the two, and I do think that the Merc won out on that.
Do you think that the exchanges are systematically important as defined by Dodd-Frank?
Yes, systemically important. Yes. I mean, I think that the markets today, when people say markets, I get very confused because I always wonder what markets they're talking about.
Sure.
But, I mean, the markets now are all so intertwined that they are systemically important. And if the CME were to fail, what would happen that would affect everybody. So, yes, they are. I mean, in a way, I think it's interesting that Dodd-Frank, by naming certain institutions being systemically important, they're admitting that there are certain institutions that are too big to fail.
Right.
But it's interesting that they're choosing the exchanges and not necessarily the traders themselves, not the banks. It's
Yeah, we talked a little bit earlier about cornering markets, and that's always been. It doesn't matter whether it's been silver and the Hunt brothers or the onion futures. There's always been somebody trying to game the system, right? So that'll never go away, and there'll always be people trying to create an edge, and obviously exchanges are there to put caps and safeguards on there. But black swans will always happen. Do you think like the flash crash that we saw in equities in May, we see a lot of, there's stop guards in the CME, but things can happen. And does this, does this concern you in some of the things that you've read and studied in your history?
Well, I think what I saw over and over was that these markets evolve in ways that are unpredictable.
Yeah.
And that certain rules, as applied in one market and not applied in the other, there are great inconsistencies between markets. The kind of natural one to look back at when you're talking about the flash crash is you look at 1987. And you looked at what happened in 87, and people are still arguing about what happened in 87. But fact is, you had this whole new force of the futures markets and the options markets and the stock markets, and they had never really coordinated and worked together before.
Right.
And they didn't coordinate in 87, and that was a problem. So I think that's a lot of what we saw in the flash crash, is you have these markets. Now it's not just futures and options and the stock markets. Now you have all the dark pools as well, and you have the gray pools, and you have these huge amounts of liquidity, and they aren't coordinating. So, and I think that's what the SEC realized, and they instituted system-wide circuit breakers. But when you have these markets keep changing, and the rules have to change with them.
Yeah. Any thoughts on POMO and QE2 in the markets? The FOMC, the Federal Open Market Committee, as it's known, the Fed, is now blatantly in the markets, bidding up treasuries here for the next 6 months to keep the POMO going. Any thoughts on that?
No, it's, I'll have to say I'd be lying if I claimed to be an expert in that. I mean, obviously, for me, when the government is buying and selling at the same time, it doesn't seem like a great plan. but I would, I'll abstain on that one because
there's a good story for you. I'd love for you to dig in on that one a little bit because how does it work? I'd love to know. I mean, they try to exude some transparency, but I'd be curious, really. How are they going in there and buying $8 billion of treasury bonds every day? It's fascinating to me.
I'll look into it. I just know that Charlie Andrews, who is one of the characters who I talk about in the book, he's a cattleman. When they decided to start doing that, he sent me an email and he said, they're selling and they're buying. And it was like madness. So I know there's a lot there, and I just have
I think it really, I think this happens, and it has changed the, really the structure of the market, at least short term. And I don't know if how does it keep going? Do they extend it in July when it's up, and do they continue? Everybody wants to know this, right? Do we start QE 3, 4, 5? Is that the only way they can continue to try to buy? But then you look at the markets, and the bond markets are saying, interest rates need to go higher, so we're going to sell the bonds, even though the Fed is in there buying them. So I still have faith in the free market, but it's an interesting time because this money that's being printed is being actively pursued and pushed into the market. So it definitely is changing the structure currently. We'll see what happens. And it's definitely the rest of the story needs to be told for sure. Now, I asked you earlier, I asked you, have you ever put on a trade? And you said no. And you said, now, based on what I know, I don't think I ever would. So what do you mean by that?
I'm going too far. I think sometimes that I need to open a futures account if only to be able to kind of walk the walk, talk the talk. When I was on the floor, I've had people and in arcades and other places I've had people put on trades for me so I can experience the rush of the market suddenly moving on me. But I'm keenly aware now of how many forces there are and moving parts there are in the markets, and how you can be right on your fundamentals and still get killed on the trade, and how there are just so many factors at work that it makes me, it's like people say about entrepreneurs, and you have to be naive to start a business. You have to just jump in not knowing. The more I know, the more I'm worried and more I stand back. But I do think I should open an account.
So I'm curious, because the point that you just made, I think a lot of people, because of their lack of wisdom, the younger people are more aggressive in any kind of trading, whether it's stocks or futures. And I think as they age and they've been through, the outliers on the bell curve, those black swans, if you will, that happen, flash crash, whatever it may be, these events that happen and will continue to happen as long as we have free markets. Do you find that the staying power of the individual trader or a group of traders is a young person's game, and I would tend to say young men?
I think what you just asked is a really good and actually really important question, because one thing that I learned over and over and heard over and over from people was what they learned from their older generation of traders. And that the older generation of traders knew how to take risks and knew how to take them carefully. And there was one guy who told me that he put on a trade and it was a bad one, and some guy pulled him out of the pit and shoved him up against a wall and was like, never do that again. And then got the other guys to let him out of the trade. I think that there's a certain amount of education, a lot of education that people had working on the floor, trading on the floor, that's not going to be there now and not going to be there for the next generation. And I think when you don't have that, you'll have people blowing out a lot more and blowing out a lot faster. And I think it's very interesting that the big brokers now are out there actively selling futures. TD Ameritrade is selling futures. Right. I think, it's a priority for them. And I think you will see a lot of people not understand the markets, what they're getting into, and blow out.
Yeah, it's a growth. It's definitely a growth market for the retail brokers. I agree with you. And on one hand, that's a good thing. On the other hand, it makes me, this was my follow-up question. Do you think some of the big guys and the big floor brokers, the big traders, I always tell people I want to play where the liquidity is, right? And I want to play where kind of the dumb money is. And if we get more dumb money, does that skew the moves? Do we have more of this kind of crazy volatility just because you have people maybe that aren't playing by the rules that you learned, a long time ago, so the game has changed?
Maybe. I think that's a good question. It depends on how much dumb money comes into the markets, right? Yeah. I'm kind of skeptical that they could get all of Main Street America trading futures, but then again, I'm sure people said that about stocks and look what's happened. So, and stocks, a lot of it seems to be
poker, Vegas,
Vegas. And you're seeing it in ETFs, right? And I don't know. I think that Eddie O'Connor, if he was so he passed away last week, and something that was said about him was that when I was at his funeral, and one of his friends got up and said, when I met him, and I said, what do you do, Eddie? And he said, I manage risk. And that was the end of the conversation. But when people go in trading now, they're not thinking about their role in the marketplace and as risk managers. A lot of people, these young guys are thinking about making a lot of money, and so that does change the equation, and it does change the markets.
Yeah, I agree, and it is a lost art. It's one of the things that I try to, as anybody who wants to get into the business, I always ask them how much money. They always say, well, how much money can I make if I have 25,000? And the question
how much money can you lose?
Yeah, exactly. My answer is always kind of the Eddie O'Connor response. How much money can you afford to lose with that $25,000? And then they look at, if they look at you like, well, 25,000 or I don't know. Like you said, the scary thing about futures is you can start with 25,000 and be in the hole 200,000, like that. So
right. But it's nice that those young guys are coming to you and you're having this conversation, which is typical of kind of the education that traders had in Chicago. So maybe I should be more optimistic, and this education will continue, that people like you will teach, other traders.
Yeah, but it is different because it is such a wide open field now. You don't have, again, it used to be just the floor. You had to go to the floor. You had to go to New York, Chicago, San Francisco, really, in this country, maybe Kansas City, Minneapolis, if you wanted to trade in certain markets. But now it's pretty much, I can do this from any island, from my boat, from my cell phone. I can trade anywhere, anytime. And that's kind of crazy, like you said. It definitely skews the playing field. I don't like if I go to Vegas, I want to play where kind of everybody's playing by the book. I want to hit. If the dealer's got 16, we stay. Otherwise, we're waiting for him to bust. But if I'm playing with the guys from Des Moines at 4 a.m. and they're drunk, and I got the old lady who's hitting on an 18, I don't want to play there. So,
well, one thing I don't want to fall into this so nostalgic, like, oh, the floor was great and everyone learned to trade and everything was perfect, because what you're describing also sounds really exciting, that you can trade from anywhere in the world and anyone
absolutely.
can trade. And in a way, that's a great thing, and it's exciting, and who knows what will be. I think it's always just good to know where we came from and to try to.
I agree. I agree, and it's a fascinating story, and we're definitely at this convergence of paths right now, and it's a positive thing. I've been on the floor, but I've never really participated as a floor trader myself. So I've always traded upstairs for my nearly 2 decades. So but it's changed. I mean, it's changed, it's evolved, and it's fun. I mean, that's what makes this business so great, is because it's always changing. And I would just say to you that you've got a great beat, and enjoy it right down there. There's a lot of characters, and we've talked about a number of them. So I look forward to reading your book completely. I have not finished it, and it is called The Futures. And I recommend everybody run out and get it. It's educate yourself and learn about this business. It's always good to know. As a history major from Michigan, it is important to know from where you came.
Yes. So. Well, thank you very much.
Okay. Thanks, Emily.